Okay, good morning, traders, and welcome to Trade the Structure and the morning Jumpstart US market wrap. All right, got that out of the way. So another risk-off session overnight. Obviously, Ukraine concerns are really weighing on the market at the moment. A lot of safe havens took off. You'll see gold rallied hard. We've got the yen rallied hard. We've got other safe haven bonds took off. US dollar. So it was all pretty much one-way action from the start of the European session. So we'll tick over all that. We'll look at some key levels where I expect to see some action or reaction, we like to say, today. So yeah, it's all about Ukraine issues and the uncertainty of what's going to happen over there after Putin started flashing around nuclear weapons. So it's a real bit of an issue at the moment, and also too the fact that crude took off at rally. It's targeting about a 110 a barrel. So that's just stoking that inflation fears and interest rate rises. Now the RBA held off from an interest rate rise. They were citing, I don't know what they were citing, but they don't seem to be too concerned about inflation at the moment. So that's going to sooner or later that's going to weigh on the market, the Aussie market as well. But US look to be raising rates soon, and I think this is only going to stoke the fire. Okay, with the rally into oil. So we get over to Aussie. We'll start off there, get into the Asian market. So this was the close of last night. Okay, the market closed yesterday's day session. Market sort of popped up on the open and then drifted lower into that 755. Popped up and then was sold down pretty much after that. So it was a bit of a grind down. It looks like there's still some buyers out there. Whether or not the market gets a bit of a sell-off, but at the moment it looks like there's a bit of love into our market still. I mean, with the way it rallied up here, and looks like it's getting a bit of a base. I wouldn't be surprised if we pop to sort of this level, 725, 70.25, and then get knocked down a bit. Now this is the SPY. Don't forget the SPY 200, not the ASX, but the ASX is looking, something like this. I wouldn't mind, a bit of a pop on the open, bit of a flush of these sellers. Sellers we built up here, flush them and then drop. Okay, I don't expect. Don't expect it, but I don't see why the market's going to take off. Okay, our ASX is going to take off. I wouldn't expect that that's going to start to rally. The love for commodities might help, and obviously these higher inflation and oil and all that sort of stuff may support the banks. But like I said, the RBA is not talking up rate rises yet. They're pretty reluctant to do anything about that at the moment. They want to see inflation, at the higher end of 2 to 3%. Okay, for CPI. So yeah, we'll keep an eye on that, but I'd be surprised if we see a strong open. I would expect to see a weak open, but you never know with these markets. It could be manipulated one way or the other on that open, really just to squeeze out some traders. So over to Hong Kong, well, Nikkei and the Hang Seng. This was the action on the Hang Seng. You can see it. We're on the 15-minute chart now. It popped up. So this market was kind of heavy, and it was looking okay off that 22,840 mark. Flushed 22,620 and then ramped straight back up again. Okay, so that was the start of just into the start of the European session. And it pretty much did a nosedive. Okay, after that, so you can see that what I mean by this manipulation, the way the market's chopping around, it's uncertain, and there's obviously a lot of bigger players that don't want to see it fall over, but it sort of can't help it. There's still a lot of sellers coming into that market. You've got this 22,620 level weighing on the action, pressing down to the lows, 22,430. So I would be inclined to think if we start to pop up to here again, 22,620 on the open, I would expect to see some heavy action and the market to sell down. If it just dives straight through 22,430, it could be a momentum move down, but it loves to flush like you see. So it's potentially this is the flush of that zone. Any stops from sellers, sold into here, stops above there, got stopped out, and it's gone straight back down again. So it may need to flush back up and then drop. Okay, but it's definitely, you can see that weight is to the downside for sure. The Nikkei, now we've still got a bit of a short on that one. Starting to see what happens. I think it's still looking really heavy. Okay, so you've got this level up here, which it popped up on the open, 26,910, and then was heavy ever since. So we've got an anchor to the downtrend. This move down is way up at 26,805. So you can easily flush higher and then roll. Okay, so the market may want to just squeeze out some of these sellers, squeeze them out on a bit of a pop, drag in some buyers and trap some buyers above that level, 26,535, and then dump on them later into European US session. Okay, so that's what I'll be looking for. Otherwise, it's just going to drive straight back down on the open. There's going to be a bit of fear on the open. Now that trend had a big sell off here, big pop back up, but to me, it's still looking like a short. It's still getting weighed. Okay, it's still looking a bit heavy. Dow. Now Dow was up at this level 34,010, held lower high, and then really started to accelerate to the downside. So it was just opened up, testing into that area. We saw this level action from yesterday, the end of the month, and then the first we've seen this bit of a pop and then drop. Okay, so it's just squeezing on these buyers. Any buyers built up here, starting to squeeze on them. So I would expect this level to hold 33,490, maybe a bit of a drive up into there just to squeeze out some more sellers, drop, and then a bit of a pop and then drop, okay, and maybe look down to 33,005. It could just drop straight from there, but that for now, if I do see a bit of a pop, I'm looking for shorts off that level, and if it comes straight back down, I'm trying to follow that trend down. Okay, but either way, that to me, after we broke that 33,490 area, is looking a little bit heavy. I'll be surprised if that starts to hold and we ramp straight back up again. Okay, US tech. Now this is a big one for, obviously the increased inflation fears. I think it's going to weigh on that market, and I really didn't add to that. Let me just give me a second. Let's just move those levels so you can see them. So that's this level here. I think we've just broken through that level, which is kind of the anchor to that move up. We sort of popped up into this 14,320, drag in some buys. Now whether that was the session before, just bear with me 1 second. So this is the start of the US session. And this is basically start of Europe. So it just popped in the European session, and Europe was really, really in sell-off mode. And then it comes slam back down again. You've got a bit of a pop up again, slam back down again. So it looks like the buyers are trying to defend it, trying to suck it up and pop it up through that 14,330, but it just doesn't look like what's going to happen. Okay, to me, that looks like it's going to be heavy. We're going to start to look down to these levels, 13,760, and then back down to 13,370. Okay, so I'll be looking for shorts on that one. I'm not a raging bear at all, but I just do believe there's some more downside, this kind of reaction up. There's still a lot to happen in Ukraine, and there's a lot of uncertainty that weighing on the market, and maybe this bounce here, which has started to stall, has dragged in some opportunists, some buyers, but they may start to get squeezed out. And once it starts to roll, if it does start to roll, you're going to see that sellers that sort of held, buyers that held it all the way through here are just going to start to get nervous too. So it could be, more weight from selling and less support from any buyers starting to step in. Okay, DAX pounded last night, wasn't looking too crash hot. Let me just go over to that. So the market, we were talking about this yesterday, starting to find some resistance at 14,440, and then it pushed down to that 14,160, trying to hold, and then slam back down even further, back into these lows, from previously at 13,865. So trend is down, pressure's on. Whether we start to pop, drag in some buyers in the Asia market session, or the start of Europe, we might get some bargain hunters and then slam down in the start of US session. Okay, but either way, it is extended. It's a bit extended down here. It's been some big moves down, but when the fear starts to grip traders, you sort of experience really, really shallow pullbacks and some really deep sell-offs. Okay, so just bear that in mind. Don't start to look to bargain hunters, because it could just sort of chop around here and then get smacked again. But the weight is down on that one too. Weight is down on the FTSE, which is the European, UK 100. Just get these levels in here to show you. It's just bounced off this level, 73.06. It's heavy, okay? The same as the other markets. You can see it had a resistance zone at 75.45, so that was that close on Friday, and pretty much the end of the month. And then the start of the new month, it's just been selling. Okay, they tried to hold it up. Once they hold it up and they get the close of the month, the 1st of March starts, then there could just be some selling into there. Okay, unwinding of more positions. So that's what I'm sort of expecting. I'm expecting these lows to start to come under fire. 72.39, even down here. What's that level down there? Let's just see. It is around 71.83 or so. So it could easily, really start to power to the downside. Now, currencies, US dollar rallied, safe haven buying into the US dollar. Now, I think the Aussie's got some love for commodities, being a commodity currency. It's finding a bit of love, but it is getting capped by that US dollar buying. Okay, whereas previously, the sort of US dollar is a bit mixed. The Aussie's popping on the US dollar sell-off, but now the US dollar is bouncing. And that safe haven buying, and we're finding some pressure into the Aussie. And that was from the start of the European session was pretty much the highs. It rallied up and then flushing down. So I'll be more inclined to be biased down on this one, okay, through 72.47. Okay, Euro, obviously, start of the European session was here, sell-off started, US dollar buying, safe haven buying started, and Euro headed straight down. So now we're extended into that support area at 111.27, whether we find a bit of a pop, which I don't kind of expect it, a bit of a pop into here, and then rally. I don't expect that. I think there's going to be some more likely we're going to get that sort of action. A lower high come to play and then expand down through those lows at 110.89 or 110.90. Okay, so that's what I'd be looking for. Maybe retested that zone. Maybe potentially that's what we're seeing now. But don't forget that Europe is the biggest session. Asian market session can kind of set you up for a sell, then ramp back up even higher, coming to the European market open. So just be wary. Know where your stops are. Pound got slammed down, off that level 134.40. I think that was at the start of the European market slammed down, so it was holding up okay. Okay, it was starting to drag in. You can see these higher lows in here, dragging in some buyers, looking for that break through these high, and it didn't get through there. It basically faded just prior to that. Okay, just on the open. So these lower highs, what you want to be working into, especially this lower high below the MAs, is what you want to be looking into. And then the market got slammed down into these lows. It's potentially going to attack that low at 132.75, but we'll see how it goes. To me, I would like to see a bit of a squeeze just to take some of these sellers out, and then maybe something like that. I want to see a bit of a squeeze. I don't want to get short just here, on the break into that low, because it could easily flush that low and jam straight back up again. Okay, so I'll be looking for more, maybe not like this bit of a move, but maybe a retest up towards 33.72. See if we can just flush out some of these sellers, flush them out, the MAs flatten out, and then we get a lower high to work into. US yen, it was a yen buying, safe haven buying that powered, pressured this market lower. So you've got US dollar going up, but obviously the yen has been outweighed, okay, the rally into the US dollar. So basically the rally into the yen is stronger than the rally into the dollar, which means that the pair is heading south. Okay, I think I'll spat that out all right. So we saw market sell off, bounce back to 115.28, and then sell off again. Okay, so to me, we'd be looking down towards that 114.52 area. You want to see potentially these inside levels hold, if we can hold this inside level, but you've sort of got these two at the moment. So I'll be more inclined after seeing that flush that we're going to just pop, and we might flush, and we might have a bit of back and fill. Back and fill meaning this sell off here, we might get a bit of a pop up, and then see if we can get a heavy move, okay, a bit later on. It may take for the start of the European session to see that US dollar buying again and that market head south and a bit more safe haven into the yen. All right, gold. Gold was a big one. We saw this move here. I think we were talking about this yesterday. The only thing that's going to trigger it to me up was some fear, and that's pretty much what happened. Safe haven buying. Okay, this is not trading off. It's not trading as an inflation hedge, all that sort of stuff. It's basically at the moment, because you got the US dollar going up on a safe haven buying and gold's going up. It's kind of it's just proving that it's a safe haven bet into gold. Okay, it could be look, it may be an inflation hedge, but at the moment it's not adding up that way. This rally wasn't due to US dollar movement. It wasn't due to inflation. It was just a sheer ramp up at the start of the conflict between Ukraine and Russia. All right, so that's in the move down as we're talking about. Okay, it's okay, and then maybe as we say, start talking up nukes, we're starting to rally again because it's the unknown. Okay, it's that safe haven bet. All right, so to me, I'm not buying it up here because I think it's extended. I would like to see a bit of a flush down, whether this happens all the way down to 1928 and then potentially a higher low off that zone, or we just keep grinding all the way up to 1973. Okay, so at the moment, if you're going to take a long up here, you've got to realize that it is extended, and because it is all to do with news and fear of what's happening in the Ukraine situation, if there's talks going on and things start to quieten down, you're only going to know when the market's getting slammed. Okay, because all those safe haven buyers are going to be edging straight out, and it's going to be less of a technical trade and more of just a sentiment trade. All right, oil, the same sort of basis. Sentiment is driving this market higher. The unknown, with regards to supply and demand, supply may diminish, demand's still there, driving oil higher. The conflict is really supporting oil. There's a massive level up at 110. Okay, you can't see it on this CFD, but you can see it if you go across the trading view and check it out on the futures market. You'll see that it's there's a big level, okay, from a long time ago. Now, to me, I actually really like this kind of a market if you're trading options. I used to sell call options, bucket load of call options, a couple hundred at a time, just when the volatility is a lot higher. Now the volatility is spiked, and that's I like to sell call options way above levels. Okay, so because you've got high volatility, you can do that. But in a market like this, if you're buying, trying to take advantage of that move up, you've got to realize it's stretched, it's extended. Okay, so it could extend up into 110. you got your stop way down here, it could extend and come flying straight back down again as sellers start to load in. It could just really start to get more volatility into it. It could jam through, pull back, and then really start to extend higher and start to run on. Now, when I was trading, it was trading up to 140, 150 a barrel. Okay, so at the moment it's still below 110 level. It's got a big resistance zone up there. So if it extends up there quite sharply, options could be the way, because that means the higher volatility means you can put your strike price miles away, okay, on the call, and you just wait for a pullback to buy it back, because yeah, there's a reasoning behind it, but that's the only way I'll be taking oil at the moment. All right, copper with oil. Sorry, just before I go, oil. I would expect it to extend into 110, okay, and then we'll see what happens from there. Copper, found some buying as well. Not so much US dollar based. It just seems to be, that buying into the commodities as it becomes more of a supply demand issue. Maybe less supply. They're expecting less supply. I would have thought with the US dollar rallying, we're going to potentially sell off in copper, but it's the opposite. We've found this base held quite nicely at 98. The support through here, 98.20, and now we're rallying into that over the 100 zone. We're back into that area, so just be wary that we are extended into this zone here, which it's touched on a few times. Doesn't mean that you sell it. It just means that if you're going to buy, you can be very careful, because there hasn't been a pullback. We're extended, and the pullback could be, we could pull back here, you buy it, and then we hit a lower high, because we are extended up into a resistance area. All right, so that to me, I would be more inclined to see something like this hold. Then I'll be looking to buy, because you see it a power through, then it starts to hold above. If it can start to hold above, then you're going to extend through that area, and there's going to be a lot of stops up there getting triggered for a move, potentially that 103.30 area. Okay, last few things we'll look at: Bitcoin and Ethereum. Now they're extended up. Not exactly sure why they're holding on to these gains, but it looks like a bit of because before they were reacting as the share market went lower. Bitcoin and Ethereum cryptos were reacting lower, but now US dollar rallying, they're seeing it potentially as a safe haven into that. Potentially, the problems with there's probably a bit of love. I know that funds and stuff can be filtered through, in the black market, whatever you want to call it, filtered through Bitcoin. And maybe that's what they're looking at. They're finding a bit of love with this conflict. There's nowhere else to put your cash. Rubles, all that stuff, you're going to be filtering into Bitcoin potentially. And that's why Ethereum's copping some love as well. So to me, it's up in a resistance zone, 44,550. I'd be looking for these kind of scenarios to pop up, hold, and then extend to 45,800, or we're going to get some sort of sell-off, okay, and a bit of a squeeze on these longs. And Ethereum's much the same, potentially looking to squeeze on these longs. Maybe we could extend to 30, 37, 36, extend there before we get a lower high, or we just start to grind our way down to 28, 25, because there's a few longs to be squeezed out for the potential move down. All right, that for me, that's it. That's all I'm looking at. Hope you enjoyed that. And remember, if you like what you hear, it'd be lovely if you can leave us a like on the YouTube channel. Help us grow that channel and spread the word. So thank you very much, and we'll speak to you soon.